Welcome back to RV News, your number one source for breaking updates, global currency shifts, and in-depth analysis on the revaluation of the Iraqi Dinar and Vietnamese Dong. If you're serious about staying ahead in the world of currency exchange and Forex, this is the place for you. Make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss a critical update. What we're seeing today is nothing short of explosive. Yes, the headlines are, the Iraqi Dinar and Vietnamese Dong have just surged on the Forex market, hitting levels we haven't seen in decades, if ever. This is the kind of moment investors, speculators, and RV believers have been waiting for, and today, we're going to break it all down. The rates, the reactions, the reasons, and the ramifications, all right here on RV News. So let's dive right in. As of this morning, Forex trading platforms across the globe began showing unusually high activity surrounding both the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. Traders were caught off guard when both currencies began gaining ground rapidly against the US dollar and euro, a move that has sparked massive speculation about what might be happening behind the scenes. For the Iraqi Dinar, sources are reporting a new exchange rate climbing over 0.20 USD per dinar, a figure not seen in recent history. Meanwhile, the Vietnamese Dong has also broken through psychological resistance levels and is now trading at around 0.01 USD per dong, a staggering improvement compared to its usual position in the thousands per dollar. This jump is not only record-breaking, it's paradigm-shifting. The Forex community has been abuzz with activity as volume on both the IQD and VND skyrocketed. According to data from major currency brokers, trade volume for the dinar increased by over 800% in the past 24 hours, while the dong has seen a 500% spike. This kind of movement is rare and signals more than just speculative trading. It points to institutional involvement and possibly coordinated financial shifts by central banks or sovereign wealth funds. Some traders noted that liquidity in these currency pairs, which was traditionally thin, suddenly opened up, allowing for larger transactions and deeper market depth. In simple terms, the big players are entering the arena, and that's not something to ignore. Now, many of you who have been following the Dinar and Dong for years might be asking, what triggered this? Why now? What has changed? The answer, it seems, lies in a combination of geopolitical shifts, monetary policy updates, and possibly pre-planned economic reforms that are now being enacted. Starting with Iraq, over the past several weeks, there have been quiet but significant moves within the Central Bank of Iraq. Sources on the ground have been reporting meetings between Iraqi financial officials and representatives from international institutions like the IMF and the World Bank. Though the details of these meetings were kept confidential, insiders have long suspected that Iraq was preparing to reintroduce the dinar to the global stage as a tradable, asset-backed currency. That day might have just arrived. Backing this up, we've seen several contracts signed between Iraq and foreign investment groups, particularly in the energy and construction sectors. These multi-billion-dollar deals are denominated in dinar and suggest a newfound confidence in the currency's value. Furthermore, Iraq's foreign currency reserves have reportedly exceeded $100 billion, giving it more than enough cushion to support a higher exchange rate. The country's gold reserves have also increased, with some estimates placing it among the top 30 countries globally in terms of gold holdings. All of these factors contribute to strengthening the dinar and provide legitimate justification for its newfound value. Turning to Vietnam, the picture is just as compelling. Over the past year, Vietnam's economy has been surging, fueled by strong exports, a booming tech sector, and increasing foreign direct investment. Apple, Samsung, and other global tech giants have been shifting production into Vietnam as part of a broader realignment of supply chains. These moves are injecting billions into the Vietnamese economy and strengthening the country's financial foundations. At the same time, the Vietnamese central bank has been extremely cautious in managing inflation and maintaining a stable monetary policy. They've been quietly increasing their foreign reserves and, just like Iraq, have hinted at a possible de-dollarization process, seeking to strengthen their native currency in international trade agreements. Moreover, international confidence in the Vietnamese Dong has been growing. In recent weeks, major financial institutions have issued favorable reports on Vietnam's economic outlook, with some predicting that the country could become one of Southeast Asia's dominant economies by the end of the decade. With this kind of outlook, it's not surprising that traders are beginning to take notice and take positions on the Dong. The fact that it just crossed a historic exchange rate threshold only confirms what many have been suspecting for months. Vietnam is ready to step into a stronger role in the global economy, and its currency is following suit. Adding to this firestorm is speculation around possible rate adjustments being prepared behind closed doors. There are whispers, unconfirmed but persistent, that the U.S. Treasury has been reviewing currency status reports with several international allies, focusing on currencies long considered undervalued. These currencies, including the IQD and VND, have been on the so-called watch list for manipulation, due to their long-standing artificial pegs and suppression in Forex markets. But if the international community, especially entities like the IMF and BIS, is now supporting fairer valuation practices, we could be on the verge of a massive global currency realignment. Let's also not forget about the role of redemption centers and the tiered exchange structure that many in the RV community have long anticipated. Several sources have reported that select redemption centers were recently activated in multiple states, including Texas, Florida, and Nevada. While no official announcements have been made, there's growing chatter that Tier 1 exchanges have quietly begun and that Tier 4B, the group that includes private individuals holding Dinar and Dong, could be next. These reports are not confirmed through mainstream media, but the timing aligns too closely with today's Forex explosion to be dismissed entirely. For those holding Iraqi Dinar or Vietnamese Dong, this could be the moment of a lifetime. The opportunity to exchange at historic highs is no longer a theory. It's unfolding right now. But with that said, it's important to exercise caution. As with any currency revaluation, volatility will be high. Rates may swing wildly, and scams will no doubt increase as people try to take advantage of the hype. Always make sure you're working with licensed financial advisors and reputable exchange centers. Verify rates before locking in any transactions, and be wary of anyone promising contract rates without documentation. Now, let's talk numbers again. For the IQD, the rate seen on several Forex trading platforms earlier today was 0.22 per dinar. That means 1 million IQD could now be worth $220,000 USD, a monumental shift from just a few days ago when it hovered near $850 to $1,000 USD for the same amount. For the VND, with current rates showing 0.012 per dong, 1 million VND could fetch approximately $12,000 USD, up from just $45 USD just weeks ago. These are game-changing figures and, if sustained, could mark the beginning of a global revaluation wave. As the world reacts to these developments, we've also seen sharp moves in related markets. Gold prices spiked slightly today, possibly indicating investor hedging ahead of what could be a wider economic shift. Oil prices have held steady, with Iraq remaining a critical supplier, and the Vietnamese stock index jumped over 3% in a single day. These concurrent moves point to broader confidence in these nations and their currencies. In fact, some Forex analysts have begun issuing bullish projections for both the IQD and VND, saying that if certain macroeconomic reforms continue, we could see even higher rates by the end of the quarter. What does this mean for the RV movement? Everything. For years, this community has been watching, waiting, and preparing for a moment just like this. We've tracked the patterns, studied the policies, and followed the global clues that pointed toward a revaluation. And now, it appears that moment is no longer on the horizon. It's here. This could be the first domino in a much larger chain reaction. If Iraq and Vietnam are revaluing, who's next? Could we see a wave of currency readjustments from countries like Zimbabwe, Indonesia, or Iran? Could a global shift to asset-backed currencies be underway? These are the questions now being asked in serious financial circles. In the meantime, all eyes remain glued to Forex platforms, central bank announcements, and any statements from major financial institutions. The world is watching to see if today's rates hold, rise further, or get pulled back in some sort of market correction. But no matter what happens next, the fact remains, today, both the Iraqi Dinar and the Vietnamese Dong made history. They proved that years of patient observation, belief in global realignment, and faith in economic fundamentals can pay off. And for the RV community, this is validation that we were never chasing myths. We were ahead of the curve.